Welcome to TradeTheNBI.com. This is John. This reports for the 10th of July, and well, confirmed on the DOC spread. We've got the green coming below, and we also now have red falling below the zero line. All the recipes that you want for decay, except for the steel coming from underneath here and climbing rapidly. Now, if there's a change and we get a pivot back up of orange and a fall of steel, then we can expect a much more precipitous drop. For right now, just a little bit of softness, probably fit within the range zones. There is the potential that we, have dipped down here on this little shakeout and can start the next run that heads back up. But we also have plenty of room for a little bit more of a retrace. We've filled in on the NASDAQ and that, but not quite here on the S&P to that 55 level. So there's a little more room for that to potentially make a slide. And given that this is the best scenario you had from the ES, but see, now here's exactly what we're talking about from an NQ standpoint, much stronger, where you already have the steel crossing, warning of, hey, the potential for turnaround to the upside for the general move, even while you're in a decay from midterm buyers as well as long-term buyers. And what that allows it to do is short-term buyers keep things in place, and then you get that wonderful little turnaround, which creates the pop and causes short covering, blah blah blah. So Euro still holding flat in there. No major news to speak of to cause any major tilt action for anyone at this particular point. Doesn't mean it can't happen at any moment, but we'll continue to watch it as it goes here. We have oil still holding on right in that same level. We can see the improvement with the shakeout indicator, as well as the improvement from the steel. It still doesn't look like it's going to break out anytime soon, but it just needs a matter of that cross. We were looking to see if that orange was going to dip. The fact that it didn't indicates it's probably not ready yet. It's okay. It's in a pause. Likewise with gold, resetting here on the shakeout, trying to ease off some of this overbought conditioning that it had here when we were above the 13.5 on the red DOC, which is absolutely insane. We'll see if it's able to pivot before it gets to the 0 point. That would indicate a little bit more strength. If it breaks down below that, then we'll see about maybe moving a little bit lower towards the 61% Fibonacci line. But right now it's holding ABM greens and all that, doing okay. And from a 5K standpoint, let me just go ahead and shrink this back up because I was trying to get a nice view of it. From a broad cross section, of course, we had the lovely pre-market dip that came through, based down here. Now, didn't quite produce a reset of steel on this dip, but you had the super strong configuration of the shakeout crossover in that. And I didn't think this would last because, again, the crossover and the spread occurred where it was below negative 13.5 to less than, and look at that, it boom, short-lived, came down, and then boom, the second wave that started positive shakeout, producing X's, and that led to the turnaround, which was clean from that standpoint. And you ended up with a lot of cyan under red throughout a variety of that, and then we ended up into this pause phase that even on the pop retraced all the way back down again to that 776. That became a weighted placeholder, and then of course we hit the 88, couldn't even venture to get close to that one before being smacked right back down to the 76. We dipped back a little bit below it while putting in this brief little buy that we're in currently, and it's an improved setup from being at the previous 76, though we are at a much higher elevation in price. And we stayed positive shakeout through the majority of that run-up, which was pretty strong from that standpoint. So I would expect that we're probably going to revisit below that 76 again in a little battle up and down on either side, because it looks like the 76 range is new accumulation as well as selling. It seems like anytime we get further above that, it's hitting a little bit of resistance because of just profit taking, the normal activity. This isn't anything new, super exciting. It's just pretty straightforward stuff. That's the long and the short of it. None of this was all that interesting. It was pretty much the same readings we've been looking for over and over again. So we'll take it for what it is and keep looking for something unique. As always, though, the ranges have been excellent, so you can't complain about that. That's the volatility beautiful. Trade well, and we'll talk again later.